Tech is definitely in charge this morning, up about 1% plus. Record high Dow, record high S&P once again, and the VIX below 17. Let's get to Bob Pisani. Hey, Bob.
Hello, Carl. It's a great start to earnings season. 3-1 advancing to declining stocks. Take a look at the sectors. They're not really what's critical. It's what's critical is earnings. But tech's leading the way. You can see the growth sectors here. But even defensive, healthcare and consumer staples strong. Energy weak. Banks a little weak. This is typical. Once banks start reporting, they're normally weak for a few days into reporting season. I wouldn't be concerned about that. What's amazing here is remember the game. They believe analysts have been underestimating the earnings. So far, they've been right. And so far, they've been spectacularly right. The analysts have been spectacularly wrong. Look at today's numbers here. The U.S. Bancorp, Bank of America, Citigroup, United Health, Pepsi. Nobody got the estimates right. The highest estimate of any analyst here was way below the reported number. And most of these have 20 or more analysts reporting them. Way off. We're talking about chimpanzees. They didn't even hit the dartboard, let alone hit the bullseye. And that's what moves the stock market forward when you say, well, we knew they were too conservative, but wow, they're really too conservative. That's why you get the stock market moving forward here. If you look at the actual reports, what the stocks are doing here, you can see it's sort of a mixed bag. There's been a lot of discussion amongst the analysts on the banks. It's very noisy with the bank numbers here. Most analysts prefer to focus on loan growth, net interest income, which is fair, not great, obviously, instead of reserve releases or other things like trading activity, which is very noisy. So that's why you get the banks kind of moving around. But United Health, Pepsi are moving to the upside here, reminding everybody what moves the stock market, what moves stocks. There's four principal things. Number one is earnings and whether they're going up or not, and they have been increasing. Number two is dividends and whether they're going up, and they have been increases. Number three is changes in the multiple, the PE ratio. Right now, I would call it stable at about 21 to 22 times forward earnings. And finally, a lot of people like to look at liquidity. How much money is there to buy stuff around? And that is very high. This is why the stock market is high right now, because these factors are all aligning. As for reported earnings, Larry Fink was on this morning, and I want to give you just a sense of just how big the big people are getting, and nobody's bigger than BlackRock. $172 billion in inflows. This is an amazing number. Now, we're talking about all asset classes, ETFs, everything, but that's in a quarter they took in here. Their iShares ETF business, $2.8 trillion. That's almost 60% of the value of the entire ETF business in the United States. One company controls about 60% of the entire ETF business. That's an amazing. Larry Fink made that deal many years ago, one of the greatest deals in history. Assets under management, $9 trillion. Think about that, $9 trillion here. And investors in BlackRock have been very richly rewarded. You can see that those shares have doubled since the bottom in March. Carl, finally, just want to quickly note my favorite thing looking at the retail sales number. If you don't think the reopening is real, take a look at these numbers. Sporting goods up 23%, gasoline 11%, and my favorite, restaurant and bars up 13%. That reopening is very, very real.
Shepard Smith here. Thanks for watching CNBC on YouTube.